Talk about the primary market, then liquor company, Allied Blenders and Distillers, as you know it as ABD. IPO opens today for subscription. It's a 1,500 crore IPO, 1,000 crore fresh issue. And the IPO dates, of course, on your screen. We have the issue price as well, between, the IPO price band between 267 to 281 rupees. We're joined now in our studios by the MD of the company, Alok Gupta, and Ramakrishnan Ramaswamy, who is the CFO. Thanks a lot, gentlemen, for joining in, and welcome to the stock market itself. The first question, 1,000 crore fresh issue. You have a debt of roughly around 800 crores as per your red herring prospectus. So if you could tell us how much of that gets paid down immediately, what will be your annual savings in finance costs?
Well, thank you so much for inviting us. The objective of the issue is to pay off our entire debt. Therefore, of the 1,000 crore proceed, the entire debt will get paid off. That has a significant reduction in our interest cost, and therefore leaves sort of internal accruals to be able to put in as growth capital. So
roughly closer, what would your cost of finance be?
Well, our cost of finance is about, since we have declared numbers only up to December, it's about 150 odd crores.
150 odd crores, you annualize it to about 180, 200 odd crores. So 200 crores of finance cost gets wiped out, and we see profitability increase to the tune of about 150 crores if you account for the tax as well.
Well, I think there'll be a significant reduction. So for now, I would say that it'll be more than 50%.
Okay.
Because it still has some working capital. But over a period of time, on back of our internal accruals, we see a consistent reduction in our interest cost.
Right. So let's get to business then. Since you mentioned you're going to reduce debt from most parts of the proceeds that you're going to have, what is the kind of volume CAGR that you're anticipating over the next 3 years when it comes to the business overall? Has there been a target that you have set?
We're looking at mid double digits, a combination of growing at a single digit in our mass premium segment, but more profitable markets. But it's the P&A, the prestige and above, and the premium and luxury segment where bulk of the growth is being targeted.
Can you describe the mix between the two as of now?
Well, as of now, it's, let's say, in terms of value, about 50-50, but we expect it to change significantly with every year focus being on the P&A and the premium luxury segment.
One of the threats is that while you are among the top 3 players in the country when it comes to IMFL, the top 2 players are large, and those competitors are, large with a lot of reserves behind them and a lot of might behind them as well. So in light of that, what is your strategy for market share going forward? You have about 20.9% in the segment that you currently cater at. What's your long-term target for market share here?
I think the big change in trend as far as the Indian market is concerned is the consumer. The consumer is sort of now looking at product with authentic story, looking at great quality, and it is quite evident across sectors that I want to consume better. I'm happy to pay for Indian brands even, equal or better than a sort of a global brand. So I think for us at ABD, it's about figuring out that key customer insight that allows us to position a brand and to be able to sort of engage the customer better. So I think that really is the way we'd like to position ABD, which is more as a challenger brand and catching the tailwind of what's happening on the consumer side of the story.
Mr. Ramaswamy, I had to ask you about your capacity utilization for the first 9 months of FY24 stood at around 63%. Do you plan to take that higher, and are there any further capex plans that you have outlined for the company going forward?
So we are at 67%, that's what we are operating at, and for the bottling capacity, 70% capacity utilization is supposed to be pretty good and prudent. So we have a headroom there, and as far as the distillery is concerned, we are at 100% capacity. There is a good chance we may get into backward integration on a future date because we are catering only to currently 30% of our own in-house consumption. So there is a good chance we will have to look at backward integration and increase the capacity of the distilleries.
Is there any capex lined up for the future?
Well, we have plans of putting 2 distilleries, but it's still in thought stage, and we will look at it at the right time.
Right. One of the things that stands out in your numbers is that your margins are between 7 to 8% over the last 3.5 years, the period that you've reported in your red herring prospectus. And this compares with something like a United Spirits at 18%, Radico Khaitan at 12%. You are speaking about the premiumization trend. So do you have a ballpark in which you would like your margins to go double digits by when to start with, and then maybe low teens, etc.?
Absolutely. I think the sort of medium-term outlook is to get at a peer parity EBITDA. I think there are 2 key drivers, and we sort of covered both of them during our conversation. So first, let me bring in what Ramki was saying is that we are considering getting into a backward integration. Currently, 100 liters of ENA is what we consume, 30 liters is what we produce, and 70 is what we buy. The idea is to get to 100% captive ENA and that increases our gross margin by almost 200 to 300 basis points. So that's a big jump in terms of where we are today. And second is on back of a higher share of value coming from both P&A and premium and luxury, we expect gross margin expansion of another 200 to 300% basis point. So when you put these two together and look at what our exit is, we are sort of close to where our peers are. So I mean, that's really what the game plan is.
Two-part question on that one.
Yeah, sure.
When does all of this come to fruition? Do you have a timeline to that? And secondly,
sure.
What does your product mix look like then at that level?
Right. So I think I would say a 3-year is a reasonable horizon to get there, right? We will see a big jump in the immediate year, which is the current year, and thereafter the captive ENA facility might take between 18 months to 2 years. So I would say over a 3-year period, we should be in the peer parity EBITDA. On the question of what does our brand mix look like, if we look at our portfolio currently, we have Officer's Choice, which is a mass premium player. A very, very important point, because this is the price point at which consumers get into the world of brands, right? So they will do about 20 million cases. Our P&A whiskey segment, we have 3 millionaire brands. We have Officer's Choice Blue, which is an extension of Officer's Choice, does nearly 4 million cases. In 2018, we had launched a brand called Sterling Reserve, which is a semi-premium brand. Again, does about 5 million cases. And Iconic White, which we launched in November 22, went on to do its million cases in the first 13 months. We did about 2.2 million cases last financial year. And in Q4 of last financial year, we were exiting at an ARR of 3 million cases. So these 3 brands put together gives us a very comprehensive portfolio to play in a 120 million P&A whiskey segment. Just moving on to the premium and luxury side, which is really at a price point 1,500 rupees all the way to 15,000. What we've done is that we have carefully chosen about 4 to 5 flavor price point where we believe we have both right to play and right to win. And these 4 to 5 flavor price point will be both whiskey and non-whiskey.
Any updates on the MRP revision in Telangana? There have been reports of that coming in, of the price revisions there. Have you heard of that on an official basis?
We have not heard of any price revision so far. Our expectation is, going by the last 10-year historical, that the price increase should be next financial year.
Right. And final question then, when you're talking about 3 years down the line in industry parity margins, which would be somewhere around mid-teens, if one was to assume that, what would the top line look like at that point with all these things that you're talking about, the number of cases increasing, premiumization and all of that?
Well, we should be looking at a top line of between 5,500 crores plus minus NSV level, not at gross level. Yes.
Perfect. Thank you so much for joining in, and we wish you good luck for the IPO. We'll see you when the stock lists, and that time we'll press you a little more.
Thank you so much. Much appreciate your time.
All right. So with that, it is the conversation that we had with the management of ABD. The important part, the 2 headlines that we got, they are looking at margins going to mid-teens in the next 3 years with about 5,500 crores on the top line. And also with the funds that they get from the IPO, they're looking to pare their debt. So savings of almost 150 crores coming in on finance costs as well. Take a short